Hey, I'm Bill Fanter, founder of Options Action, and you're watching the weekly Watchlist. If you'd like to get access to this content before it goes live on YouTube, just hit the first link in the description to sign up for our free weekly emails. All right, let's jump right in. Okay, welcome back, everybody. So let's jump right into the weekly watch list for Monday, August 18th. As always, I want to start with the economic news. And the good thing is we're actually getting a reprieve of a lot of data dropping. So Monday, pretty much coast is clear. Home builder confidence index. I think this will come in perfectly fine. The other thing is Warren Buffett took a fairly large position in some of the home builders. So he clearly sees confidence in that sector. So something I would not be shorting, even if news comes in a little bit light. Tuesday, same thing, housing starts, building permits. Wednesday will be an interesting day because it's the release of the minutes from the last FOMC meeting. So what will happen here typically is the market will try to read into what was written but not said at the news conference, okay? So I would highly recommend that, when this data is going to drop, don't be in a trade. That's 2 p.m. Eastern Standard Time. Now, that's definitely later in the day. The other thing, too, is on days like this, the market could be a little bit wonky, right? Especially that, again, we're trading near all-time highs. So Wednesday could be like this past Friday with OPEX, where it's just a lot of up and down, back and forth, premiums getting chopped. Because what the market doesn't want to do is get into a longer term position and then have the data say something that was unanticipated. Now, the other thing that we're going to have here is the probability for a rate cut is now priced in at about 90% for the month of September. So that'll be intriguing to see that the market is at least pricing in a 0.25% to 0.5% rate cut. But if we don't get it, then will that negatively impact the market exponentially? Because it's pretty much already priced in, all right? It's priced into where we are trading. Thursday, we're going to have some jobless claims that'll be important, as well, again, more inflationary data. So we saw the overall PPI last week. Pre-market sold off hard. Market opens, market shrugs it off like no big deal, even though it came in 4 times hotter than expected and rallied back up again to the all-time highs. So shorting this market is clearly proven to be very, very dangerous. Friday, we have nothing scheduled, so that should be clear sledding there, but not a ton of data that we really have to worry about this week. Now, let's take a look at earnings. So earnings this week, we're going to have more of the retailers coming out. So we'll get Home Depot, we'll get Target, we got some builders with Toll Brothers. We have Walmart that's going to be coming out on Thursday. So we're going to want to wait and see what do the retailers have to say around tariffs and cost of goods that they're going to either eat those tariffs into margin or they're going to pass it along to the consumer. We also have TGX that's going to be announcing that is a big staple in the overall retail economy. So let's take a look at a couple of charts. You can see here, SPY, that we are just trading back and forth within this channel. 642 to 646, right? Some really nice up, back down, right? Push up, they come down, they test the lower band here, but then push it right back up. So the market is just, again, constantly seeking liquidity. Where do we go from the highs to the lows? Now, when I'm doing charting, right, you'll note that I chart on a extended time frame perspective because I do want to see the pre-market and the post-market and what have you, but I'm really going to wait for a confirmation of a daily high before I use this prior all-time high here because, again, this was pre-market. Look at the volume. You can't even see the volume because it's so light. So these are my levels for SPY. No changes there. QQQ, kind of the same thing, right? We pushed to this upper band right on the market open, 583. We are now trading lower. They really need to hold this 577 If not, we could push lower to 574 and then ultimately down to 572. So again, the uptrend is still somewhat holding, but we got a bit of a consolidation here to see, can we ultimately go higher? Let's take a look at some of the large cap weighted stocks. We're going to start with Apple. Again, since the press conference at the White House about a week ago, this thing has been just ripping higher, up about 12%, which I believe caught a lot of people off guard. But you can again see we have a really nice trading range here, right? Between 225 to 230. 230 up to 235 or 234 and change, right? With a prior, higher high up here to 237. Now, I'm not really worried about what's going to happen up here at 250 or, all the way up here at 260. Not to say that the market can't get up to this level, but right now we're just really going to focus in on where is the market trading today, right? And so consolidation here with an anticipation that they're probably going to want to push this higher. So when I'm charting, again, I'm looking for multiple touch points where the market has peaked and then ultimately sold off. Okay. Now, if we can get this candle here, let's see, I'm going to probably have to widen out the zoom a little bit so that we could pick up the top of this range. But again, same thing kind of right here, right? You can see we push up, right? We use it as support, and then we get a little bit of noise. We get a push up, 200 SMA, and then we dramatically push lower. So these are some of the levels that I'll watch if we get up into this zone where they're pushing higher, and then they're ultimately selling lower. And they're pretty much repeating themselves, right? You can see here this pivot high ended up being a pivot high here, a pivot high here. So right? Just mark your levels and just observe. Where are the lows? Where are the highs? Where are the lows? Where are the highs? It's telling you where there's a lot of liquidity to actually move the market in one direction or the other. So let's get back to where we're at today. And you can see that we are trading here back at this upper band. And I have been using some blue interim levels during the week because you'll note that when I'm from 230 to 237, it's too hard of a push, or 232 to 237, too hard of a push. So they'll run it up, sell it off, run it up, sell it off. But also note that while I have my yellow lines on my daily 4-hour, 1 hour, I'll have some blue lines on a 15-minute time frame to say, are they going to stop short and reverse? Or are they going to stop early, like they have been here, and then bouncing? Okay. When we look at supply and demand, we're pretty much in demand, right, with the supply up top. So I would expect if the market is going to have some strength on Monday, that Apple would push to the upside. Let's go ahead and take a look at Amazon. Amazon, again, has announced some news that their fresh delivery is going to go to same day instead of 24 to 48 hours, which is what it was before with Whole Foods. So again, lower time frame. We're holding this 230 quite nicely. Yeah, they do dip below, but they're grabbing liquidity and they're not able to hold this thing down. So again, if we have strength on Monday, I do like calls going back up to 233. Now, if we fail this 230, just be prepared, right, that it could be very short-lived. Unless the market is exceptionally weak, you're probably not getting down here. Now, we'll look at the reason why. Same exact thing, right? You're trying to short where there's all these buyers. You really need to get below this 228 and change, or this, 228.76 level to really go short down to 225. So I would not short here, right? I would prefer to short down here where I have some open space to fall to the next level of overall buyers. So let's go ahead. We'll update that. Let's take a look at Google. Google, again, back to pushing some of its prior all-time highs. Trading pretty decently here. Again, this thing has caught quite the bid. Once it got above 200, it really took off to 201 and then to 205. Right now, I don't have anything. I do like a reject at 205, a bounce at 201, but we're trading mid-level here. And so for me, I'm not really too interested in this thing, right? We could go ahead and throw, a level here. Again, this is an example, a 5-minute chart, interim level. Maybe we fail it,
push lower, we get above it, they hold it and go higher. But again, we're only about a $1.40, $1.50 away. So this is kind of how I use the interim levels to say, wow, on Tuesday they couldn't push it. On Wednesday they couldn't push it. On Thursday they couldn't push it. Well, on Friday they actually pushed it, used it as support, pushed it higher. Now they're failing it. Okay, so those are going to be my levels on that. Let's take a look at Tesla. Tesla, again, had some really good strength at the beginning of the week, and then over the last several days, Wednesday kind of topped out, lower on Thursday, lower on Friday. So we have a low, a lower low, a lower low, a lower high, right? We're trending down. So again, probably not calls. Again, they could push this higher, but I would prefer to go in puts to the downside on Tesla. And then Nvidia, this is what's going to control the market, right? We really need to see what their earnings are going to be. Now we have earnings coming out on this. Let's take a look right here. That's going to be on the 27th. So we have a whole nother week before Nvidia even announces earnings, which is going to be quite painful. So let's look at this stock. This is another great example of that it just is holding the levels, right? They wick it down here a week ago Thursday. They wick it down Friday. Then they do it again on Tuesday of last week. Then on Wednesday. Then on Thursday. Friday, they actually failed it, pushed it higher. But I would expect that if they don't hold this level, because it's hard to believe that they broke it after they held it for 1, 2, 3, 4, 5 consecutive days, right? They're just holding this and they keep pushing it up to these new all-time highs. So I do like this one for a potential put trade to the downside. What I don't like is that we're taking puts into overall demand, of which we have 1-day demand here, which is why they keep observing this level, but they're eating into the buyers, okay? So let's watch this one on weakness or potentially right out of the gate for a bounce to head all the way back up here to 182, right? If we could come down to 179 and hold this, then I would definitely be up for calls come Monday morning. Let's take a look at another noteworthy one, UNH. Huge run up with Warren Buffett, David Tepper, Michael Berry, all taking positions in the stock. Probably caught a lot of people off guard. I was looking for this thing to get down to the 220 level, so I did not take a position. We got down to 235 and then really struggled to push down, and then it just started grinding higher. And then this is one, right, where I would be definitely open to looking for a possible put trade, right? Unless they can get this thing really above 307 to go to 316. Maybe some of the euphoria wore off. You could see on an overall daily time frame that there was quite a bit of give back, right? I mean, so look at the overall candle on this thing, that we had a low, we had a high, but they did not close on a high, right? And now the other thing that we're going to add on this chart is we are going to add our gap fill, okay? So we have a gap that is actually going to be somewhat of a double gap, okay? Because you had a gap that was also within here. So between these two candles. So this is going to act as a very heavy gravitational pull back to the downside, okay, if we start to lose weakness. So how do I trade gaps? Well, first and foremost, my first trade on a gap is a bounce at the top of the gap. Now look at, ironically, how that's where your overall demand actually lines up. But if you get through all of these buyers, then guess what it's going to do? Start to go fill the gap back to the downside to 271. Will we get that opportunity? I don't know, maybe, maybe not. But statistically, I do know that gaps will fill 80 to 90% of the time. Now, we also have another big gap up above, right? I mean, so if they can get through all of these sellers, then this thing could definitely go higher. Now, mind you, pharmaceuticals, right? Lilly, I mean, everything has been just beaten down. And it caught a bid on the fact that Tepper and Buffett are now looking at where are the underperforming markets, right? The underperformance is clearly in healthcare. And right now, I'm not going to get into the political side of healthcare, but it's a mess, you guys. As to pharmaceutical, drugs, tariffs, penalties. Now, again, mind you, we do have a gap on Lilly. Clearly, it was a lot wider. It was all the way down to here. But, I can leave it on the chart and then watch how they start to observe this. And then do they push into the gap in order to actually push a little bit higher? Okay. Pfizer, PFE is another one that we can look at. We're right pretty much at a bounce level, 25. This one, again, has been having a lot of problems. They'll push it up, they sell it off hard, push it up, sell it off hard. Right now, it's kind of holding 25.06. I don't see anything here that I would trade, but just other than to be aware of that this sector is starting to get some rotational bids going into it. And then just a couple other ones I want to look at. We have now the retailers that I said are going to all be announcing earnings. So Walmart, again, pushed all the way up, almost to its all-time high and then sold off this week, right? So this was Amazon getting into the delivery business of groceries same day, which was not same day in the past unless you paid a significant fee. So as a result, on that news, Amazon took off, Walmart, kind of dumped, right? Losing 2.5% in a given day. It was consolidating. We talked about this as a put trade on the live, right? And that you would get in it unless you got a strong close above, which you did not get. Sold off all the way down to our price level here. So this one, kind of watch it for a bounce, but we do have earnings coming up, okay? On the 21st, my guess is they're probably going to be very strong. Walmart has not had any earnings issues in the past, and therefore I think this thing could possibly make another new all-time high. One of the ones that's been shorted, kind of like a meme stock, has been Kohl's Corporation. Huge short interest in this thing, ton of volatility, right? You can see where the memes grabbed it a couple weeks ago, back on July 22nd, right? This is when whoop, all the way up, then they sold it off. Now they're playing around with this thing again. Watch it just because the short interest is still so high. They do have earnings that's going to be coming up on the 27th, so we still got a week out for that. But this is, another great example where, okay, well, let's just look at the technicals, right? So they didn't even get to the 50% fib retracement level yet. Is that possible? I do think it's possible. Right here, we're at a bounce level that I had on the charts at 1379. The 50 fib is all the way up here at 15 and change. So I would not be shorting this thing, right? It's in an uptrend, a low, a high, a higher low, a higher high, a higher low, a higher high. This is still a higher low. This low is higher than this, higher than this, higher than this, right? Looking for a bounce in Kohl's on earnings to potentially go higher, okay? One of the other ones, Target. This one I think is going to be headed back down. I just don't see Target getting any momentum. I believe the CEO is Brian Cornell. His contract is up. They extended his CEO contract for 3 years, and there's been a lot of rhetoric and talk about the employees, that they want a new CEO. They've lost confidence in him. The problem here is, right, we have a balanced market, buyers, sellers on top of one another. Typically, that's not a stock I like to trade, but this is, again, another one that we talked about this week in the live, right? That if you got a push up that you could possibly go short. We do have a lot of buyers and sellers, so I would not be going long unless you could get above 104. And then no, it could be pretty short-lived. So this one might be better off just to leave it alone until they actually announce earnings. And then the final one is going to be Macy's. Macy's interesting, another interesting stock, right? That every time they get down to this 1260 that was reject, right? They just keep selling this thing off on every pop higher. Now, I really don't have a good level. Let's just go ahead and take a look if we can on a 1 hour time frame, what might make some sense for us. Clearly right here makes all the sense in the world, right? $13 and change. We rejected the level back here on July 23rd. They couldn't hold the level here on July 29th, and then they reject it. So we got to get above this 1327. But I do like a bounce, in all honesty, because this was such a heavy reject zone in the past that if they could use it as support down here into the 1250, It's only 30 cents away, right? Watch for a push down and then potentially going for a call trade on some strength in retail. But with that, guys, that's everything that I'm watching this week. Again, just have some patience. Make sure that you have your rules in place, right? No more than 2 to 3 trades in a given day. You don't get a fourth, you don't get a fifth, you surely don't get an eighth or a ninth, right? And it's not about chasing the market, it's about taking the trade at our level and then saying, where would I stop out? So how do you have a visualization? Where would I stop out? Where would I take profits? Where do I think I'm going to have some resistance, right? At the EMAs, at VWAP. Am I going to use a fib, right? So could I use a fib from a pivot high to a pivot low and say, okay, if I get in the call trade, right, where will I hit some resistance? That's what this is all about, in predicting where are going to be the obstacles that you can face and then dealing with them once they arrive. So with that, have an amazing week and we will all talk soon. Take care.
Thanks for watching. If you haven't already done so, make sure you sign up for the free weekly watch list emails to get early access before the video drops here on YouTube. See you next time.